My last interview of the year is with Greg McNab, National Co-Lead of the Canadian Mining Group at Denton's. In today's conversation, we discuss Canada's regulatory landscape, in particular, Quebec and BC changes, M&A in the precious metals and critical minerals sectors, ESG versus greenwashing, and why uranium is a commodity to watch coming into 2025. As a former mechanical engineer, Greg has extensive experience in both the energy and mining sectors. Greg's main areas of practice include financings of public and private security issuers, capital markets transactions, mergers and acquisitions, and resources and energy matters both domestically and internationally. He is also the director of the Canadian Chair of Canadian-Australian Chamber of Commerce. Greg will be at Vancouver's AME Roundup at the Denton's office hosting breakfasts and short courses. Connect with Denton's or the AME website to learn more. As a reminder to investors, please read all disclaimers and disclosures at the beginning and end of show. And as always, do your own due diligence before investing. Greg, thanks so much for joining us on the show today. For listeners that might be new to your story, do you just want to go over a brief background of how you got started in the mining sector?
Sure. And first of all, thanks very much for having me on. Mining business, it's an exciting one. I'm happy to talk about it all day long when I can. So I appreciate the opportunity to talk to you. So I started way back when in the steel business. I was an engineer in the steel business. My dad was an engineer in the steel business. And the steel business is one of the fundamental ingredients is iron ore. And so I heard as a kid growing up all about iron ore mining. And then when I came out of the engineering world, my fascination for mining just continued. And so I now lead or co-lead the mining group at Denton's. We're the largest global law firm in the world. And I spend a lot of my time just helping both companies and kind of investors deal with mining issues around the world, and comparing jurisdictions, much like some of the things you talk about on the podcast. The issues across countries are very different, and so that's one of our jobs, is to help our clients navigate kind of the matrix or the Hollywood squares of what one country has to offer in the mining space. So it's very exciting, but that's how I got here.
Geopolitical tensions and the landscape has changed so much in the last couple of years, and I feel like 2025 is not going to be an exception to that rule, especially with what we were just talking about with Quebec. And I know that they're appealing the First Nations consultation with claims. Can you just talk a little bit about the regulatory landscape that we're seeing here in Canada and what next year might look like with some of those narratives happening?
Sure. So, I mean, that's probably the most complicated issue that I'd say both Canada and even Australia face. So the reason I refer to both Canada and Australia is not every country is going down this pathway, but we are, and it's a significant one for energy, mining, infrastructure in both countries. But we have a similar discussion going on in both Quebec and in British Columbia. So the idea being generally that our First Nations people have a more significant say in the mining process. So the claims process, the development of projects process, and the benefits that come out of it. And so in Quebec, it's not surprising in a way that I suppose both British Columbia and Quebec are both engaging in these consultations, because they have been probably our two most mining progressive provinces in Canada. And if I had to pick one, of course, by far, I think that would be Quebec. They've been, in the last 10, 15 years in particular, the most supportive province to the mining sector. They've been forward thinking. They've been thinking about different ways to strengthen the claims process, finance, support, all of those things. And so you can't advance this sector in Canada without having an honest discussion with our First Nations peoples. And so that's what the Quebec government has done. They are having both a look forward and a look back. So they're having, and by that I mean, in the claims process, you look at what you want to do with the claim in the future, who's going to benefit from it, who has access to it. But they're also looking at some lingering issues with the claims process historically and how it evolved. And they are deciding or consulting on whether or not to make some changes to those processes. And in a similar way, that's what's going on in British Columbia as well. So that's the process. Now, the impact, of course, is on the mining sector. If you are a holder of these claims or thinking of becoming, a project holder or a claims holder, that can significantly impact the length of time it will take you to resolve open issues and to develop your claims and expand and process them. So I would say right now, everybody's at the table, but this process is a long one. There's a lot of history behind it. And so, it'll be an interesting next few years to see how these issues get resolved in Canada, all at a time when the country is looking at these issues, as a matter of, I guess, social priority, for lack of a better way of discussing it. So these are complicated problems, but the good news, I'm a glass half full kind of person. The good news is everybody's at the table and we're talking about it.
I watched one of your webinars from Denton's, and one of the speakers that you had, they talked about ESG versus greenwashing. And again, I feel like this, kind of correlates to what's happening here. For investors that are looking, how do you look at that difference? I know in your webinar, you mentioned companies that build a community, like before they've even been on the property and started their assays or anything like that, they've built the community, they've built education around it. Do you think like Canada should look at kind of building out a following or narrative like that? Or
that's actually a good way to compare the two, because and I've been involved in this space long enough to remember, what the times before we had the label ESG. So that was, we called it several things. Probably the last big label we had before ESG was maybe community engagement. But the concept is the same, is that you have discussions with people in advance, but whether or not it's oil and gas or it's mining or it's infrastructure. I think we've all figured out that you just can't show up and surprise people. So you can't just start building and then start explaining to them later on what you're doing, because now people have access to things. So they have, we used to use the word, well, we for some time now, we've used the word stakeholders. That's a relatively new word though. And when I first started 20 years ago, if you were a stakeholder, you had an equity right, you were a debt holder, you were a government department that had issued a permit, and maybe an employee. Those were the real stakeholders. We've now evolved to a state of our society where stakeholders can be people you don't even know about yet. And so the concept of ESG and managing it, I think, has evolved to a point where you have to consider stakeholders you may not even know you have. And so whether or not it's developing a project from an ESG perspective, a First Nations perspective, you have to think of who might be impacted by what you're trying to do, and what would be and they'll object to what you're doing. So what's the benefit to them of your project going ahead? So, and if you can answer that question, then why not go and get in front of them and tell them, here's what I plan to do and here's why you should support it, rather than them being on their back feet right away, trying to think up reasons of why your project shouldn't go ahead. So it's all part of, being at the table and having a discussion, but nobody likes surprises. And so if you can sell something up front for the benefits to the communities that you're going to be involved in, it'll save you time, it'll save you money, it'll save you headaches, and it'll just be better received in the long run. So I know that's not, that sounds like a fundamentally simple thing to say and do, but we see it time after time around the world. In some countries, people just go in, or companies go in, and they just assume they're going to be able to do what they want to do, and they find out very quickly that they can't. And then, in some countries that can have very significant consequences. People end up in jail, project permits get revoked. A lot of money disappears very quickly when you're not engaging with communities.
for investors that are like looking at an ESG when they're taking a look at the next project or next public company that they're like, what are some of the things that you feel they should definitely pay attention to when they're reading through that, especially as we're navigating changes?
So probably my best piece of advice on that front is the mining sector, probably even more so than the oil and gas sector, the mining sector has done historically a bad job of, patting itself on the back when it gets something right. So either in terms of recognizing that there was a different way to do something and they did it the right way, cleaning up some kind of an environmental issue. We're so used to kind of being hit over the head by the negative side of things that they just put their head down. They don't really brag much about what they've done. So if you go back though 20 years and you look at the mining sector, and things like reclamation and community engagement, they've advanced significantly. So one of the things that, if I was looking from an investor perspective, looking at which companies are going to be good in the future, because whatever they're doing now is priced into their stock price now. So you're looking at what they're going to be doing in the future and trying to figure out which ones are going to do it better. The ones that, from my perspective, I don't like surprises, like I just said a minute ago. So the ones that I'd be looking at, I would be looking at their public disclosures and saying, what did they say they were going to do 5 years ago, 10 years ago, and did they do it? And so if they did, then you can predict what they're going to do into the future. And so you look at their disclosures now and you say, well, they weren't just greenwashing. They were actually setting out, much like China does with its 5-year plan, they were setting out exactly what they were going to do into the future. They did it. And as a result of that, they've now got benefits from it. So there's many things that you can control in the mining sector. But there's a lot of things you can't. And so if you can rely, or if you can at least get it right, predicting what you can control and then doing it, I think investors should put a lot of weight in that.
I love that answer, and I 100% agree that mining, for the most part, they never say any of the things they did right. And so people still have this narrative of, yes, 20, 30 years ago of what mining was versus what mining is now.
But especially now, like we are going to be relying on mining 2-3-fold more than we have been until date. So especially now, if we are going to be kind of the providers of the stuff that we need to do the right things in terms of either climate objectives or electrification, it's not going to happen without mining. And so this is the time for everybody to sort of show their resume and say, I'm really the right person or the right company for this job. So
leads into my next question, which obviously critical minerals has been the #1 topic for quite some time now. Continue the narrative of getting to that net zero or this cleaner energy, however that turns out, it's always changing. How do you think, with our issues right now in Canada, that will impact as the US on the other side is looking like they're going to speed up that permitting process? Do you think that we'll be able to catch up in pace-wise if we get these things done? What will be the answer for Canada? Because we're such a mineral-rich country, and it feels like we're kind of lagging on pace right now.
You're right on point, because again, the glass half full is that we have an amazing opportunity. We could not find a larger offtake for the one thing that we have lots of. So, we've got a strong relationship partner in the US. We've got, the infrastructure to trade with the US. So all of those things line up perfectly. And then you layer on that we've got the energy transition. So all of those things just should be like one gold star after another for the Canadian opportunity. And so I think those things are all there. What we have to get right is the relationship management between the two countries. So we've talked for a few minutes now, and nobody's used the E word, election, yet. So I'll throw it out there. And it's not that for the mining sector, it's probably going to be a good change, because there's just a lot of uncertainty on the horizon. So by that I mean some of the tax policy changes tax policies that are in place for the mining sector. There's uncertainty about whether or not they will hold up going forward. Of course, the tariffs and all of those things. All of that bubbling away at the time that we're expecting a change in government at the highest level in Canada. And so all of those things to say, the opportunity will still be there. It will probably be greater. That's on the Canadian side. But you couldn't think of a better time in history probably for the market for what Canada wants to produce than right now. So we've got the US, all at a time when global supply chains of critical minerals and commodities are being shaken up. So we've gone away from certain countries that were the predominant suppliers, and the US government has said, hey, we want new friends to supply this stuff to us. Canada, you have some. So, and the U.S. is particularly, they've picked out both Canada and Australia as the new kind of suppliers of some of those things through the Inflation Reduction Act and its incentives. So, if we can get our act together here in Canada in the next couple of years, there will be an opportunity for us, I think, unlike anything we've ever seen in the Canadian mining sector, other than possibly gold, which is, that's a separate financial markets discussion. But in terms of commodity offtake and commodity purchasers for what we want to sell, I can't remember a time like this in our history. And so I'm optimistic that if we can make some changes and adapt to some of these things, then I think we can benefit from it significantly in the coming years.
So you think we're just possibly going through our growing pain years?
Well, I hope we're coming out of them, because we've for a few years, I'd say a few decades, our growing pain years were, I like to think it was us getting things right. So, we developed a process for, a broad and consultation process. Technology, okay, we've got some of the smartest mining technology in the world. All of this, but the thing, probably the weak link so far was, the timing. So how long does it take to get a mine up and running and into production? And so that number in Canada is well over 10 years. But the good news is, with things like technology, so by that I mean you go across Canada and the provinces are, they're revamping their claims process. So, most of it can be done online, but in some provinces, until recently, you had to actually file paper copies. It was just like something out of an old movie. All of those things are, so I think we're coming out of our growing pain years. I hope we are, in the last sort of few years, but this fire of opportunity and incentive, I hope is going to accelerate, kind of the last few hurdles. And so, and part of that what I've just said extends to the discussion about consultation. So I hope we have everybody sitting at the table saying there is very soon going to be a very large pie on this table, and let's discuss, how we get the pie to the table, and then we will figure out how to share it afterwards, rather than having a fight over who's going to get, the biggest piece of an imaginary pie that never comes to the table.
I love the glass half full attitude. It's nice to hear for mining. Again, one of the topics and narratives that we've seen is a lot in the M&A space for mining. What do you see the landscape like for 2025? Do you think that's going to increase or kind of stay the same? Or do you feel like in the next couple of years, we're going to outpace what we've been doing?
So there's two worlds in the mining space right now. There are two halves to it. The M&A answer is different for both. So on the precious metal side, so particularly gold and silver, I think most of us are sitting waiting. So initially when the price of gold and silver started to run up, of course, because it's historically been volatile, we all waited to see whether or not that was a temporary thing and it was going to dip back down. But it hasn't, and now we're kind of waiting to see whether or not it keeps going. But generally, I think most people in the industry are comfortable that it's going to stay somewhere above historically where it's been. So the price of gold's gone up. Some of the intake or the input costs have gone up as well. But for the most part, the margins in the gold and silver sector have gone up. So, but the valuations have not. So the gold and silver producers, their equity prices are still roughly the same as they were 3, 4, or 5 years ago. And so on the M&A side, there's many of us think there's sooner or later there's going to be a catch up. Usually if I'm an acquirer, I'm sitting looking at my targets and saying, wow, their product is now selling for 60, 70, 80% more than it was 5 years ago. But the cost to buy them is exactly the same. They're cheap right now. So now, so I better buy them before the valuations catch up to the commodity price increases. So we'll see if that plays out, because if it does, then it means that there's there's a significant gap right now. So there's enough room in that gap for, if I'm an acquirer, to offer a premium that's appealing to shareholders, and if I'm the target, there's enough room in there for me to make some money for my shareholders that they think they're going to do well as well. So I think the opportunity in the precious metal side is there for the markets. We've still in North America, we've got friendly capital markets in terms of acquisitions. Financing is still a bit tough, so you need the money to finance these things usually. But so I think on the M&A side for precious metals, I think we're good. On the other side, so the non-precious metal sector, so things like critical minerals, lithium, copper, all of those, they are so volatile that it is much harder to foresee positive M&As. And so by positive M&A, I think of two mid-sized companies that combine to be a major, and then can do things cheaper, et cetera, and be more profitable. I think we're now going to be into more survival M&A. So you're going to have companies that have to give up, get acquired, and taken out because they won't be able to keep going in the long term. Those are harder to predict. And so if I'm a shareholder in one of those companies, and you've been holding on for 2, 3, 4 years because you thought a lithium play was, and it was the right lithium play, et cetera, it's hard to convince you that now's the time to give up. But I do think in the next year we're going to see some offers, some transactions go through at prices that some people are. If I'm a shareholder for 3 or 4 years, I'm probably not going to be happy about. But I think that's just what's going to have to happen if we are going to get these projects online, have any hope of seeing any money come out of some of them, because depending on which commodity we're talking about, there's a lot of supply. It's still in the ground. It's not. It's just going to be a case of which ones can we actually produce from. And so I think in the non-precious metal side, the M&A front, it's going to be very lumpy, and it's going to be interest rates coming back down doesn't hurt, but it's going to be a very lumpy next few years for some of those commodities.
Do you think now, again, because of some of the challenges we're seeing in Quebec and BC, we used to rely quite a bit on Australian money coming into the junior space here? Or do you think we're going to see a bit of a pullback because we're almost at the same levels where they are, and they might be looking at whether that's Nevada or Arizona properties or somewhere a little more streamlined for the next couple of years as well?
Yeah, that was I was in Australia last month for IMARC, and I spent a lot of time talking with our Australian clients about the coming up here model that they were so used to. The dollar is a bit off right now, so that does throw off the economics. For like the last 20 years, the Australian Canadian dollar used to be 1.01 to 99 cents. It was remarkable how close it was, and now there's a bigger gap, 10% plus. But the same factors still apply. The projects, our governments work roughly the same, so there's no risk for an Australian company coming up here or a Canadian company going down there that will have any kind of a challenge on foreign investment things. We've got the same investment banks, or some of the same banks, playing in both markets, so those things get financed. Where the one thing that on the Canadian-Australian dynamic or conversation is the topic of uranium, which we haven't talked about yet. That was probably the thing I got asked about the most when I was in Australia was, did I think that uranium was actually going to take off in Australia? The Australians have always been cheeky about uranium. They produce it and they sell it to the rest of the world, but they don't use it themselves. And so, but there's, depending on who you listen to, there's some political movement afoot to change that. So there is perhaps some appetite for technology and tech skills from the Canadian side to get exported back down to Australia to allow that. But I think there's always been enough flow back and forth between Canada and Australia that it would take a lot on the mining sector. It would take a lot for that to get disrupted. I think there's enough Australians see opportunities up here in Canada and vice versa. There's so much similarity in, we both have extreme weather. Their version of extreme weather is different than ours, but there's just so much similarity that when there is a lull in the sector in one country, it tends to pick up in the other. So I don't expect to see much changing in the Canadian-Australian front. I think that'll continue to be a strong discussion.
For investors, as we've just talked through a few different versions and narratives that are happening, how can you like, or what would be your suggestion to improve their due diligence or like risk assessment going into 2025 with all these moving pieces of the puzzle and yes, elections are looming?
Yeah.
What would you say is like maybe like top two or three things that they should, pay attention or look out for coming into this year?
So probably like one of the big ones we used to talk, I'd say, well, in the last 10 years, we talked a lot about resource nationalism. And that used to take many forms, but I mean, everybody kind of thought they knew what it meant. I mean, I start to divide that into two things. So into what I call internal resource nationalism and external resource nationalism. So the internal stuff is like what you're seeing in Chile with its lithium project development, and the government saying, listen, everybody, I know you thought you had an interest in a lithium project, but we're going to kick you out. We're going to take it over and run it ourselves, and you can do it in partnership with us, but we're now going to take over. To me, that's the internal stuff. The external resource nationalism is what we're seeing, for example, in Indonesia, where they have just quietly captured the market on nickel. And so they are now dictating who they sell the output to. And so it's not the resource nationalism angle comes from the output side of kind of. So if you're a company that needs nickel or a country that needs nickel, as maybe the U.S., you are now looking at having to have a relationship with Indonesia, not about price. It's about whether or not they will sell to you. So if I'm an investor, I should be looking at resource nationalism as probably one of the bigger risks, because it's not something a specific company can fix. So by that, I mean, if I'm a Canadian project, if I'm a rare earth project and I've got a significant Chinese investor in the company I'm invested in, right now there is a risk that Canada will impose its will on that company. If the company can't change that, there's nothing they can do. It's just it's a risk that the company can't get out of. So if I'm an investor, I'd be looking at risks that companies can control themselves rather than being at the whim of government change, which they have no control over. That's probably that sounds like such an easy thing, but that has shifted. So if you went back 5 years ago, you would not have predicted that the Canadian government would have an issue with certain Chinese investments in projects here in Canada, but that's exactly what's played out. So if I'm an investor, I would be looking at my portfolio and saying, what risks are maybe there now that weren't there 4 or 5 years ago. So that's something. If you're an investor, you can take your money out of those companies and move them to somewhere else. But if you're the company, there's just not going to be much that you can do to help with that. And then maybe on the other side, if I'm looking at where to put my money on projects, the longer the time frame, the greater the risk. So there's only a certain small number of jurisdictions where the timing and cost to develop a project is coming down. A couple of months ago, the Toronto Stock Exchange held a big kind of investor day for it was the KSA, or the Kingdom of Saudi Arabia, talking about their mining project timelines, investments, etc. And so I'm just using this as the example of what we talked earlier about Canada, how one of the things we need to get right is to shorten that process. Well, in the KSA, it is a matter of months to get projects up and running and at least started, so shovels in the ground.
Wow.
That's in part, that's of course due to the good or the bad is they have one government department that approves or doesn't approve a project, and once they approve it, you're full on. You put your shovels in your ground, you go. So if I'm a shareholder or a potential shareholder of two companies or two opportunities, and I've got the opportunity to work in a jurisdiction, maybe it doesn't have to be the KSA, but the point is, if I've got two jurisdictions to pick from and one has a shorter time frame, given what's going on the good and the bad front. So, for example, if it's a jurisdiction that the U.S. has shown an interest in, the U.S. right now is going to put money to work to develop assets quickly. And because, as we've seen in the last couple of weeks, the U.S. government and China are now into a bit of a tat-a-tat about rare earth projects, some of which are now a concern for U.S. Department of Defense assets. So if I'm an investor, I'm going to be looking at where can I get something online quickly that can feed into this massive U.S. demand. So, and you can have the mine is where the mine is. So you can have a great project in a jurisdiction though that is going to take forever to develop it, or you can have maybe a mediocre project in a jurisdiction that will develop it quicker, and the U.S. is going to buy everything they produce. I'm probably going to be more inclined to go that way. So I'm going to look. That's a geographical, political analysis combined, but timing is everything in this sector right now. Yeah, so I'd say the sooner you can see your target company making a profit, then that's probably a big risk to take off the table.
That is excellent advice. And Greg, what's your favorite commodity going into 2025? What's the one that you're keeping your eye on the most?
I'd have to say uranium, simply because I've been around long enough to remember when uranium was seen as, it was a dirty product. It had this, horrible byproduct at the end. And it has transitioned itself to being green. It's clean. It does solve a lot of the problems that we're talking about. The issue is there is just not a lot of supply coming online. And so it's going to be interesting to see how some of the disruptors in the uranium space, the uranium supply space, so like the Sprott Uranium Trust, which it's taking a large percentage offline. It's going to be interesting to see what happens with uranium, with the U.S. government and increased demand there, increased demand in both China and India. I just don't know where I see good things for the space. I'm encouraged by, I hope in the uranium space, we'll see how we can accelerate project development and then use that knowledge or that approach elsewhere. So I think uranium is the one to watch for me.
I love that. And Greg, I know you're going to be down here for Roundup. Do you want to just quickly mention the dates and any of the panels or breakfasts that you're going to be at for any investors or companies that want to reach out? And then obviously where they can reach out to you if you have LinkedIn and socials that you like to connect on, or.
Yeah, no, thank you very much. We are going to be in Vancouver in the third week of January for AME Roundup. It's a big event for us. We're hosting a breakfast on the Monday morning, and then we are hosting a short course on the Tuesday afternoon. Our office is straight across the street, so it's an easy way to connect with a lot of our clients and colleagues. I'm on LinkedIn with just Greg McNab at Denton's, and you'll find invitations to our events there, as well as kind of an update on some of the other stuff that we've got planned. Events like Roundup it's a great way to put a bunch of people in a room and have a discussion in real time about the risks, the opportunities, and everything else. I love those kind of events. So if you're going to be in Vancouver, then say hello.
Well, that does it for today's Exploring Mining podcast. If you'd like to be a guest or sponsor for this podcast, please contact investorideas.com. InvestorIdeas.com reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website. All investment involves risk, and this podcast is not meant to be an endorsement to buy or sell securities or products. To hear more podcasts, you can go to investorideas.com/audio. And a reminder, you can also hear our podcasts on iTunes, Spotify, Google Play Music, iHeart.com, TuneIn, Stitcher, Spreaker, and SoundCloud.